you have favorites in this basket. Now, for me, I love Bounty. This Bounty, I'm going to call maybe, I don't know, who do I really love? Tesla. Hey guys, welcome back to the channel. So this video is going to take a step back and look at investing from a different lens. I know that investing is a huge topic right now all across social media. TikTok, Instagram, Facebook, YouTube. There are a multitude of us, it seems, talking about investing. And I'm thankful for that because it is my mission here to give everybody who is a first-time investor tangible information to help them on their investment journey. But with that being said, and the fact that this channel was grown by 4,500 subscribers in the last 28 days, I also acknowledge and also know that so many voices in a room can often mean that you may not necessarily be getting the clear messages that you need to. So in this video, I want to share with you one key principle that if you implement, I promise is going to make your investment journey so much easier. It's going to cut through the noise. It's going to get rid of the confusion between investing and trading, buying individual stocks, index funds, all this stuff that we talk about so often. This one principle will be your guiding light. And if you take this on board, I promise you, it's going to give you clarity. So it's all about simple investing. Yes, the title says UK, but these principles are applicable worldwide. So even if you are watching outside of the UK, I thank you, I love you. You're going to get benefit from this. Let's try and keep things simple. All right, so before we get things started, and for the first time on this channel, I want to say thank you to today's video sponsors, Money Farm. Now, Money Farm is a digital wealth manager managing over £1 billion for people invested in the market, people just like you and I. And unlike traditional investment platforms or robo-services, they combine 24/7 access to your investments with a team of data-driven investment advisors who, get this, are able to speak to you and recommend solutions to help you on your investment journey. That may sound trivial, but that is a big deal. And they're able to do this without the high cost of financial advice. And if you've looked at the cost of financial advice, it can be quite expensive. Their charging structure is very, very simple. There are no hidden costs. Their funds are managed. They are rebalanced by experts, which means that you're not giving up anything in terms of expertise by using Money Farm. And best of all, you're able to access high quality, low cost ETFs across 7 risk profiles and 7 portfolios, essentially. Now, in all seriousness, guys, I know that as a first-time investor, it is important and it is nice to be able to pick up the phone to someone to sense check what you're thinking. I know this because of the levels of comments and questions that I get on IG in my DMs every single day. I know this because of the number of people who attend my live Q&As every fortnight here on YouTube. Literally, just this past Sunday, we had 140 people. It is important that you're able to pick up the phone and just check that what you're thinking is correct. And if it isn't correct, it gives you that room to be able to maneuver, to take a new approach so you don't make a mistake. And this is what this is all about. It's about making the best decision for your hard-earned money. I have got a full review on Money Farm coming in a couple of weeks' time. But in the meantime, I strongly encourage you, check them out using the link in the description and pinned in the comment section below. Now, with that said, in this video, I want to talk about a core satellite approach. And I know that sounds complex. It sounds like rocket science. It sounds like gobbledygook. But believe me, I promise by the end of this video, it isn't going to sound like gobbledygook. It isn't going to sound like rocket science. Actually, it's very, very simple. And in the interest of keeping things simple, I'm going to explain how it works with this box of celebrations. And listen, guys, if you are researching how to invest and you're coming across so many channels here on YouTube, because there are a ton of us here talking about investing, each with different levels of experience, different levels of knowledge, different perspective, different opinions. That is all very well and good. But having so many voices in a room can mean that you don't really hear the message clearly enough. You actually then put on top of the fact that you've got so many apps and so many providers out there right now, you can get to the point where you just have so many choices and indecision just becomes a thing because analysis paralysis, you looked at so much stuff, you don't even know where to begin anymore. This approach will cut through all of that. It will keep things very, very simple. So, what is a core satellite approach? Now, the idea of a core satellite strategy is very, very simple. So, at its core is the idea that you invest the majority of your money into a core group of holdings. So, for example, you may look at this box of celebrations and you will see that we have bounties, galaxies, Mars bars right here. You've got Maltesers, you've got Milky Ways, you've got sneakers. Each and every single one of these suites represents a company. Now imagine this was a much, much bigger bucket with say 500 of these suites. So you could say that those 500 suites represent the S&P 500. By investing my money into this basket, it means that my money is invested in every single one of these suites. And this is essentially the idea behind the core strategy. You invest in a fund or an ETF that gives you access to as many companies as possible because it allows you to, number one, diversify your risk. And it also allows you to have access to buy, take ownership, be part of as many global, international, established companies as possible. That is your core strategy. Now, the satellite part to this is the idea that, for example, you have favorites in this basket. Now, for me, I love Bounty. This Bounty, I'm going to call maybe, I don't know, who do I really love? Tesla. No prize for guessing there. So I like Tesla. I might say, you know what? I love Tesla so much, I want to put some of my money in this Tesla stock right here. And what I do is I have a satellite option that allows me to invest in Tesla. I might say also, the sneakers could be, let's say, Apple, right? I like Apple. Apple's beautiful, big company, lots and lots of money, tons of cash, the biggest market cap on the planet. I might think, I love Apple. I'll have some more of this. I'll also invest in this as a satellite investment as well. And what that essentially means is that, one second, guys. And what that essentially means is that I still have a lot of my money invested in a ton of companies. But because I have an interest in Tesla and Apple, I allocate money to those companies as a satellite investment that sits around my core. So in other words, I love Tesla so much that I want further exposure, and I'm going to apportion a proportion of my money into that stock directly, even though I hold it in my core strategy. Now that brings benefits because whilst you have advantage of being invested in, let's call this box right here, the S&P 500, and you've got your money going into those companies, because you've got money invested in, say, Apple and Tesla, Tesla's done really, really well this year. You've got a smaller proportion of your money enjoying higher returns than usual. And with that, it means that you have better growth in an area of your investment without neglecting all the other companies within the investment pool. And this is really, really important. Now, there are two ways in which you could actually talk about acquiring your core strategy. Now, the first one is you could take a hands-off approach. So if you want to take a hands-off approach, you would essentially outsource this to a fund manager or a provider, an investment platform, someone like Money Farm, for example, who build funds to invest in companies like this, where you can literally just invest your money, leave it, forget about it. They manage it, they run it, and all you need to do is check back once a year to see if it's performing as well as you had hoped. Very, very simple approach, very, very hands-off. Now, that may not suit absolutely everybody. Some people may want to take the hands-on approach. If you want to take the hands-on approach, you can use the likes of Vanguard, Hargreaves Lansdown, Fidelity to source an index fund or an ETF of your choice where your core strategy essentially sits. So for example, if you wanted to go and buy an S&P 500 ETF or index fund, you can go and source that and allocate a portion of your money to that core strategy. But again, this hands-on approach may not be for everybody, because for you to be able to pick an ETF, you need to be able to understand what an ETF is, how an ETF works, what is actually included within that ETF. There are a number of ETFs that on the surface do exactly the same thing. What are the differences between the two? How do you know? Are you willing to do that research and to manage it yourself and not have somebody else take that responsibility for you? I don't know. Many people have different approaches and opinions to this. If you run a very busy life, you may not necessarily want to have the hands-on approach. You probably want to have the hands-off approach, which means you physically just go and find a provider who can do this for you. If you're happy to spend the time doing the research, managing, monitoring this investment, then absolutely you could go and buy an ETF or something like this of your own. I'm going to have another Tesla, and I know many of you may be thinking you're wronging because bounties are horrible, but I absolutely love them. And that brings us to the satellite approach, because the satellite approach is a complement to the core strategy. It's not there to outshine it. If it does, fantastic. But your core strategy is really the core strategy. The satellite is there to add value in companies like Tesla, because Tesla is my favorite. It is there to add value. So my portfolio at the moment with Tesla, last time I checked, was up 340%. The stock has taken a little bit of hit over the last week, so it's probably around about maybe 320% right now. So it is a nice addition, a value add to my overall approach. Most of my money, guys, is invested in funds. And look, this approach isn't going to work for everybody. But I believe that if you take this on board and you implement this, then it's going to make things a lot easier for you. Because guess what? You get the best of both worlds. You get to invest in a ton of popular companies, or in a fund that is designed to invest in a ton of popular companies, and you still get to indulge in the sexy stuff. Buying the Teslas, buying the Facebooks, buying the Apples, minimizing your risk, more importantly. And look, guys, nothing's ever simple when it comes to investing, and we do have to do our due diligence, and we do have to be careful. My goal here on this channel is to ensure that if you're a first-time investor, you don't make a mistake that goes and puts you off investing for life, where you lose money and you don't want to carry on, because that would be a real shame. And look, I remember 2007, 2008. Many people haven't really lived through this. The one in March wasn't anywhere near severe as the 2007, 2008 depression. People lost a lot of money back then. And this talks about some of the stuff that you're going to be finding here on YouTube. What are you paying attention to? Trading and investing. Those two things get confused all the time. They're used interchangeably. They're two very, very different things. And whilst it can be very, very confusing because you've got so much stuff being thrown at you and so much content in videos, some of it completely incorrect, it's very, very hard to distill down to the core of what you should be doing. This strategy gives you, it's basically your compass, it's your North Star. It is going to keep you on the right track regardless of what happens, because guess what? You're always going to have your core, and you're always going to be able to indulge in the sexy, sexy stocks that you really, really like. And I like Tesla. I'm going to eat all of these guys by the end of this video. But you get what I mean. So guys, there it is. Let me know what you think of this. Let me know whether this is something new that you've never heard of. Let me know if you've heard about it before. But I strongly believe this is how I invest my money. I have money in funds. I still hold individual shares. And best of both worlds for me works for the way I want to invest. And I think as first-time investors, there is too much emphasis now on trying to pick individual stocks. You just need to have a look at the story of Warren Buffett, and I would encourage anyone to go and Google this, search for it here on YouTube. The bet that Warren Buffett had with professional fund managers some years back. His bet was, I bet you an index fund, something like the S&P 500, I believe he chose, will outperform anything that you pick. And these are professionals, people who have been in the industry for years, who have access to company CEOs, COOs, CFOs, big companies, boards, who can have conversations about businesses. things that as retail investors, we would never have access to. And lo and behold, the index fund outperformed the expert picks. It just goes to show that sometimes, just sometimes, the simple approach is what works best. I encourage you to go watch that and go find it here on YouTube. It is a fascinating story. And I hope it is something that you do take to heart and something that you do think about implementing in your journey. Trust me, it will cut out all of the news. So guys, let me know what you think. If you haven't listened to this week's podcast, definitely go check it out right there. I have eaten way too many of these. It is literally 20 to 12. This is how I record these videos a lot of the time. Dead of night. The things that I do for my YouTube. But guys, thank you so much for watching. I really do appreciate you. Go check out Money Farm. They're a great, great service. I've got a review coming in a couple of weeks' time. And guys, remember, money is a tool, life is for living. I will catch you on Friday.